Good day. Ira Epstein of Linn Associates with your market wrap-up, and this is your financial market wrap-up for Tuesday, the 2nd of June, 2020, the time 5:25 p.m. Central Time. So as we look, the markets have reopened. We're into the Wednesday session and everything except the grains at this point in time. And as you can see, the Brent, the WTI crude, they're getting a little bit of a bid. The net build in the API number was about 7 million barrels. They're looking for about the same, although a little different mix on where those barrels are going to build from on the EIA number in the morning. And what I'm watching, of course, is the refinery rate as well, which is running about 72%. And the question is, when does it start picking up? That will pick up as people hit the road. Today I went out again. I was on the highway and very crowded, that I can tell you. Of course, Chicago's crowded because you can't get off any of the intersections to get into the heart of the city. They blocked the city down. Tomorrow, as I understand, that's going to be lifted, and we'll see just where things go. In Chicago, they are going to open it to the point where you can eat outside. Of course, it'll be smaller areas, but you're going to be able to do that. Salons reopening. In other words, the city's saying, at some point we have to reopen, let's go for it and see if that stops all the looting and the rioting that we're seeing in different parts, not only of Chicago, but other parts of America. As for the stock market, the question is, what is the market thinking right here? Is it one of these runs like from, as I keep mentioning, 2009, when the market started up and it didn't look back? A lot of people think it is. If you watch the financial shows during the day, they'll tell you, well, valuations, maybe they're a little rich. You can go up maybe by year end another 5%. There's 10% risk to the downside. Let me tell you what I saw that bothers me. I went driving around in different parts of the city today, and I had to. I had some things I had to do. I was only gone about an hour and a half. Everything's boarded up. I saw more for rent signs in what we'll call the hip, the good areas of the city than I've ever seen. So many of these small operating stores that hire 2, 3, 4 people, but you get them all over. I mean, this is a big city. Those people aren't coming back to work. We haven't felt the impact of that until this program, this pay program, runs out, I believe, at the end of June. Then we're going to get a much better idea as to just how bad things are. So as much as the market's up, and I'm not a doomsdayer, don't get me wrong, but I wanted to see with my own eyes. In areas where you would fight to get a spot, forget the rent, just fight to get a spot, they're empty. And it's not just the looting. This whole pandemic has set this off. So stores, be careful. That's what I'm trying to say. Bonds and notes hanging in. Why? Well, we had today the Reserve Bank of Australia. They held their rates steady. We're going to get the European Central Bank coming out with what they're going to do. Next week, we're getting our own bank coming out with whatever they're going to do. So the markets are in that hold area. But as we look at the metals, a bit of a correction today and a bounce tonight. Let's take a look also and see what the stock indices are doing, because since let's call it just 24.38, this market has come up dramatically, any way that you want to cut it. It's not at the highs, and I'm not one that's thinking it's going for the highs this year. I could be very wrong on that, but it's come up and come up dramatically, and those that caught the bottom and did well, good for them. They did a heck of a trade. When you take a look at how this market came back, it's one of these moves that's continuing to go this way. It's no longer this big ride here. It was a flat ride, now working up to another level. In other words, it's stepping. It's forming these bases to work from. We haven't begun this next level of the base. We'll see if that begins soon. The trend certainly to the upside. As a chartist, you never fight what the trend is. Higher lows, higher highs, uptrend. Where's the market in relation to the 18-day average of closes? It is over it. Now, it got in April over it, and if we look at it just a couple of times in May, you got under it, didn't close under it, by the way, did close under it here for 3 days and has not looked back. What else happened today? Because you got to dissect charts each day. You had a bullish crossover. So the 18-day average has crossed the 100. Chartists that use moving averages, in my opinion, will say, well, that should mean a new high on this leg. Now, the high during the day today was 30.79. We already tonight went through that leg. So in theory, that's all I'm saying. In theory, the market's already made the higher high from the crossover. The next crossover is the 200-day average. That number comes in at 30.02. So where's the resistance? Right, what it's been doing. You keep your eye on the Bollinger Band. It gets up to it, it backs away, it comes a bit sideways, and then it goes forward again until it stops that pattern, which you'll have an idea of when the slow stochastics turn down. Slow stochastics are embedded. What is embedded? Embedded is exactly this. It's when the slow stochastics first gets both numbers over 80, and then it keeps them there for several days in a row. Now until the red line comes back under 80, my theory is that the market's going to find solid buying on these breaks until that occurs. And when that occurs, I then look for price in the closest moving average. It could be the 200-day. Make a run at each other. Right now, it's still embedded. So the traders, there's other moving averages that I put in my morning subscriber video where I've been telling people to buy this market, just to give you an idea. It's not the 200-day, by the way. But as I look at that, you can see how the market's acting, and this market is still acting in the bull camp, going for these highs. The target in mind has got to be the upper Bollinger Band, but I do think we're getting to a point, that's all it is a point, where maybe all that we've built here needs to consolidate again. It consolidated once, it's moving up a channel. We'll see if I'm right on that. In the NASDAQ, the momentum again to the upside. It's re-embedded itself. It's got that going. So it doesn't matter if you have a pattern of higher lows, higher highs. What matters is that on the pullbacks, I would expect the pros are buying. And again, there are some moving averages. I show them in the morning subscriber video. And that's what I think they're reaching into as the market breaks to them. As long as this embedded reading stays in place, that's what I expect with challenges of that upper band. Lose the reading, and just like we had here, a run towards that 18-day average when it dropped out here, that's what I'd expect. In this case, it didn't quite hit it, but it got darn close. And the idea there is you're looking for the pullback at that point towards the closest moving average. In the Dow, embedded reading. So now the 100-day average becomes the support. You went over it, it was resistance for a bit, now on pullbacks between that and the 18 support. What's the difference on this chart? You didn't get a bullish crossover of the 18 over the 100. When we come to the NASDAQ, you've got the 100 over here. Your bullish crossover was back here. This is when the red line went over the red went over the green, the 100-day average, and notice how it's kept the market as its support level. In this particular case, it's a bit different, and the question is, can we get to the point where we're going to get a crossover? As we step to the Russell is similar to what we just showed here in the Dow. It's got both the 100-day and the 200 above it. Here's the Russell. You see that. The resistance is very defined at 1472 to 1482, let's call it, right there. The upper Bollinger Band and the 200-day average. The support still comes in at the 100-day average. That's another thing you watch. What was resistance on ways of correction often become legs of support. Now, if that one gives ground, then I look for the 18-day to be the next support. In the VIX, the market's had a heck of a time trying to even get up to the 18-day average. It's plunging again in terms of momentum. So in the momentum, are we embedding? I can tell you right off the bat, no, you have to have both numbers under 20. And they're not. You have one set there, no. The first set was today. You're just plain oversold. I'm going to repeat what I think the pros are going to do. I think the pros, if you were to get to 25.56, the lower Bollinger Band, might write puts, looking for the market to retrace back up to the 18-day average of closes. Hasn't happened since back here and here. It worked in both cases there. So until it stops working, I have reason to believe it's working. In the T-bonds, the T-notes, these markets are caught in what we call this pipe. Notice how sideways they're going. The market is frustrating traders. You're looking for the breakout to the downside, it doesn't carry. The market gets close to or hits the lower band and gets back to the 18-day average. The opposite's true in the curve yield on the 10-year. You're staying up in this quadrant. You've got the 18 to the upper band. Look at how narrow. Again, sideways action. Dollar index. I think the dollar index is broken out to the downside. And yes, there will be some sharp corrections along the way, maybe. If you develop an embedded reading, and you're trying it to now, both numbers under 20 today, both under 20 yesterday, and the day before. You got your embedded reading. What do I think will happen once you have 3 days under? Well, that means to me that the first resistance, probably the 100-day average at 98.90. From here, that's a long ways up. It's 125 points, so let's not think it's just going to happen. And the market gets under the Bollinger Band, gets back over it. It's playing games back and forth through it. In the June euro currency on the daily bar chart, I'm looking at this market, and if you'll notice how it keeps running this band. Now, today the market finished at 111.74.5. The upper Bollinger Band number was 111.78.60. So while you had 4 days in a row up, you backed off today. And that's my point. You rarely get 5. That's not much of a back off. So this market is developing its bullish embedded reading. Here's today's action. This was the action on Monday, and this was the action on Friday. So now until you lose those numbers, what that means, the red numbers in both cases, the dollar and the euro, have to reverse course. The dollar would have to climb up above 20, the euro back under 80. I think the pros are buying on the pullbacks in the market. In the Japanese yen, you went down to the lower Bollinger Band. Don't be surprised if the market tries to hang at that. But what have we done? We're trying to break out to the downside. It's finally trying to stick its head out. Why? It's a risk on mentality, not for the yen. That's what hurts the yen. The risk on's in the stock market. The risk on is in sectors. It's just taking place across the board as people think that was the opportunity and the market's running. The dollar's at the other end of the cycle. If you saw my piece on TikTok yesterday when I was talking about the dollar for Bloomberg, I had mentioned, I said, you have to understand the psychology at work. People think Europe can catch up now, and the U.S. is at the other end. We're still dealing with our melees. We're just reopening. They can gain on it. And the tide, when you wanted to own the dollar because of pandemic, is sort of doing this right now, which is probably what the president wants to begin with. Not that strong of a dollar, but not a super weak dollar, which will help our trade as we come out of our melees. In the Bitcoin, no surprise, you went up to the upper Bollinger Band. This is how we looked on yesterday's video. If you hit the band, the first thing I tell you is the first time you hit a band, up or down, look for the pros to take money off the table. Nothing works all the time. If that's what you're looking, stop watching these videos, because I don't know anything that works all the time. But I know probabilities. And the probability is the pros are going to do something there. Doesn't look too bad, does it? Has anything happened with the trend? Well, you still have the lower low and the higher high in the June, and this is what you look like tonight. Not bad. So I think the pros, they have buying power. The question is, do they want to use it? In the Brent versus the August WTI, well, the market's trying to get back to 260, this is the 18-day moving average of closes of the differential between the two. OPEC has got a meeting on June 4th, Thursday. It sounds, and that's all I can tell you, OPEC is strange. They leak everything. And it sounds as though they're going to go for a 30-day extension of these cuts. Russia doesn't want to keep them in place that long. The market is rebalancing itself. As you can see in Brent, you're pushing on to the $40 a barrel area. You're $39.68. That's a pretty good price. It's certainly not down here into the $20 area, and it's not a negative 40 that the U.S. saw. Unbelievable, isn't that? Higher lows, higher highs, embedded reading. The resistance to me is between 39.60, let's see, that would be the 40.87. That's the number. That's the Bollinger top, is 40.87 to 42.16. The 100-day average. That's where I'd look for the resistance to step in. On WTI, it's the combination of the 100-day and the upper Bollinger Band, here at the 38.58 to 39.23 area. But is there any doubt in your mind in looking at this chart that these lows that were made back here, it's going to take something terrible to get the markets back to those numbers? It could happen with another wave of pandemic. Barring that, the economies are growing. I think you've got to play that. Barring the pandemic coming back, This market has made an important low. Gasoline, cars are hitting the road. So as much as the markets, if you will, just getting back into the embedded stage, both numbers, can't count tonight. Got to go to Tuesday. Both numbers over 80, both over 80. Now Friday, right on 80. I never know what to do with that number. So today will tell me on the close should it be there, because it's 80 and over, not 80 itself. And it's just a hard one to guess. But I am looking for resistance if it rallies into the 115.15 to 117.49 level. Support on breaks, say 100, 200 points. Nat gas. You might ask yourself, why is nat gas just laying down as the diesel, which is distillates, gasoline coming up, crude coming up? Why is this not? Listen carefully. How do you get oil out of the ground? You pump it. When you've got this well in there, what's one of the byproducts? Natural gas. So you're producing that nat gas again. And if you don't think that you're going to hear that these wells, many of them, are reopening at these prices and they can make money, I think you're wrong. I think they will reopen. I think we're going to get that, and you're going to continue to get more nat gas. So nat gas, unfortunately, needs a real big wave of heat, which we don't want to see. It gets very uncomfortable, but that's what it really needs. Barring that, I think the pros are selling it until that embedded reading is lost. If you like this commentary, you'll probably love what I do in my written comments. If you'd like to see them, just go to our website at www.iraepstein.com. Free offers. Give it a try there. See if you like it. For those of you that have seen it, you can go to our research area, sign up for any of my research, and that's the place to do it. I'm Ira. You have a good day. I'll see you all tomorrow.